what's the big thing that you think investors should focus on in 2024?
In 2024, I think going into 2024, and I've been saying this all year, and I'm going to continue to say it until I think that the market has recovered, is real estate. And I really like publicly traded real estate because not everybody can afford to be a landlord, right?
Yeah.
Like to buy a property and rent that property out, but everybody can afford to be a landlord by investing in publicly traded real estate. And most of these publicly traded real estate companies operate under a structure that requires them to distribute at least 90% of their pre-tax profits to investors. So you get these steady income streams. It's literally like getting rent checks from tenants.
All right, let's get started. Welcome to the Angel Research Podcast. Again, some Jasons here, Jason Williams. I'm Jason Freiert. Let's jump right into it. Did you watch any of the predictions episode that we just completed?
I always watch the predictions episodes. Come on, I want to see what everybody's talking about.
Yeah, so what do you think? It seems relatively bullish for the next year. Things are lining up for a good year. Are you on that side or cautiously optimistic?
I would say I'm more like the cautiously optimistic. I went into last year super cautious. After 2022, everybody was super cautious, and I was definitely among them. I did not expect the economy to be as resilient as it had been to the rate cuts. I didn't expect the consumer to be as resilient as we have been. Or not the rate cuts, the rate hikes, to inflation and everything. But I was proven wrong. And fortunately, I'm always the kind of person that's telling people, like, you don't sell when you have a bad feeling. You just don't add new money.
Right.
So I got to participate in all of that stuff. Like I had been adding NVIDIA back in 2022 when it had dropped really low. That's one of my biggest positions. I've been building that since it was like a $20 or $40 stock. And so, I got to participate in that AI rally, so that was great. My investors have participated in a lot of stuff. Real estate has been perking up. I've been pounding the table on that. And so I'd have to stay cautiously optimistic. I'm definitely bullish, but not, just generally bullish.
Right.
I don't think that index investing is going to be, the easy money that it has been in the past. I think that targeted investments are going to do really well. I think that certain sectors are going to do really well. I definitely agree, with our founder and president there, our fearless leader, Brian Hicks, about real estate. I've been pounding the table. He and I have been talking about real estate privately all year, trading different, real estate investment trusts and, look at this yield, look at these assets, like, look at this, it's just, it's a great time to be buying that, locking in super high yields. I think that real estate has a big recovery coming. I think it's already started, and I think it really continues next year. Commodities, I've said I hate to quote him because Jim Cramer says it a lot, but I think it's the time to own companies that own things and make stuff. As opposed to companies that own intellectual property and, just somehow make money.
Yeah, if we go down the AI path, that's a very interesting angle because, there's this debate over the data that the AI is trained on and is it sort of like violating people's intellectual property rights?
Right,
but
that's a really
it
good
seems
question.
like the cat is sort of already out of the bag.
Oh, definitely.
So, it's been trained, it's out there, and it's not like it's like a person, right? You take in information and you sort of use that to formulate your own view, and then you produce whatever you produce on it.
Yep, definitely. That's what we do here. That's what I do. I'm not just coming up with ideas, off the top of my head. I'm out there looking at what other people.
You're reading a lot. Following the people. Right, following the people that you know and trust that have a good worldview that aren't sort of compromised.
Yep.
Everybody's got an angle.
Just copying them, but really, taking the things from them that I like and the things, and looking at what they're saying and maybe like considering it from a different perspective and seeing some different things in it.
Yeah, and I think hopefully that's what our readers are doing. We have a good staff of newsletter writers and market researchers here, but they're probably subscribed to other newsletters. They're reading other websites and sort of hopefully you sort of amalgamate all that together and to form your own strategy.
Yep,
and that's sort of
exactly.
what we want to do. We don't want anybody to blindly follow you or
No,
Brian or,
we don't
or
want them to
anybody
blindly
else.
follow anybody.
Right.
When we talk about not blindly following people, we mean don't blindly follow us either. You've got to be out there. You've got to be making your own decision. You've got to be the master of your own destiny. You can't put it in somebody else's hands. We can help you. We can give you guidance. And that's exactly what we want to do. But we also want to encourage people to really take their future into their own hands. Don't just rely on somebody else, because, look where that gets us.
Yeah, absolutely. We want to empower people to make their own decisions and feel confident about those decisions.
Definitely.
Some of the hardest things now that we were talking about with this recovery is, you look back in the downturns, and the best time to buy is when people do not want to buy or they're nervous.
Yep.
And that's psychological. For people, that is very hard psychologically.
And much credit to Brian. And I think last year Alex Koifman was on the podcast with him when he made his predictions. Both of them were bullish. Both of them, they almost called the bottom in Bitcoin to the day.
Yeah.
They were some of the only people that were bullish. I like to say I'm always optimistic, but I was very cautious, and
it's
and
very tough, because everywhere you hear, like, this is fucked. This is, going down.
We're screwed,
and
everything's
the more
bad.
you hear it, but you almost have to train yourself when you hear that to be like, okay, let me look into this, especially if it's something that historically has always rebounded and has actual value.
There's this thing that they call the wall of worry, right? The stock market always climbs a wall of worry. There's a lot of people with cash on the sidelines. They're worried that the stock market's going to go down. And basically, eventually, as the stock market continues to go up, that worry shifts from being worried that it's going to go down to being worried that they're going to miss out on the gains.
Right.
And so those people, they incrementally put more and more money in, and that ends up driving the stock market up higher.
Yeah, and we definitely have not hit that. There's a lot of cash on the sidelines. I know personally, just with the higher interest rates, when things are going on, I'm like, I'm going to sit in a savings account or a CD and get this yield.
Why not get my 5%?
Right.
It's beating inflation. There's no risk to it. I love it. That's great. And a lot of people decided to do that. A lot of people put money into bonds. A lot of people put money into money market accounts. I read recently that in a survey that they did, that something like 96% of the population thinks that like things are bad.
Yeah.
The times are bad. The economy remains resilient. The consumer is slowing down a little bit, pulling back some, but remains strong. But basically everybody is terrified that everything's broken and that nothing's going to work again. And that's one of those times, man, when you get 96%, that's almost 100%.
Yeah.
And, you're never going to get to 100%, because there's always going to be those one or two contrarians out there who are like, oh, man, everybody's terrified. I need to get greedy right now. And, I've been beating the table about real estate this year and basically saying that. And a lot of people have reached out to me, subscribers, people who have been, with me for years and years. And they're like, what are you thinking, man? This is the dumbest thing I've ever heard you say. And I'm like, you obviously don't know me that well. I've said much dumber things. Just ask my wife. No, I'm kidding. If you ask her, she will probably have some pretty dumb things to tell you that I've said. But no, nobody wanted to buy real estate. And, you're talking about publicly traded REITs that are paying out dividends of 11, 12, 13%. And the reason they're paying those high dividends is not because they're paying more money than they can afford to. It's because their stock price has gotten hammered so hard. And there's one that we really like. I'll just go ahead and give it out. It's Innovative Industrial Properties. It's my favorite.
Yeah, Brian's been on that for a while.
Brian loves it. I think actually, I think that stock helped to buy the offices that we operate out of.
He was in on that super early.
Yeah, we got in very early. We got in around like $17 a share. It ran up as high as $300 a share back in 2021. Pulled back, but this is the thing. It went on, I want to say, a 15% rally throughout November. It's still yielding above 9%.
Yeah.
You can still lock in a guaranteed 9%. And this is the cool thing with this one, right? We got into it like before it started raising its dividends and stuff. So those original shares we bought, I want to say in 2017, 2018, I think 2017, those shares are now making 25% a little bit more than 25% a year in dividends alone. If the stock doesn't move at all, those shares are still worth 25% more every year.
Yeah, and we would be remiss without talking about Charlie Munger, who recently passed away. And, he actually, it was he was in the news several months ago because he had talked about how he basically had invested, I think, $1,000 or I think it was only $1,000 back in 1970, and he was making $70,000 a year just in dividends on that.
It's
so
impressive.
10,000%.
It's impressive.
Basically a 10,000% dividend. Now it's 1970 to now. That's a long time, but it just really reiterates
it drives the point home. Think about how much stock Berkshire Hathaway owns in McDonald's, right? They now every year receive more money in dividends from that investment than they invested in McDonald's to begin with.
Yeah.
And it's amazing. I saw a stock chart, man. Charlie Munger, Warren Buffett, a legend, right? But Charlie Munger gets sort of like overshadowed by Buffett because, everybody, Warren Buffett. But if you look at the Berkshire Hathaway stock price from 1978 to this week, it's beat the S&P 500 by like 4,000 times. It's ridiculous, the outperformance. Buffett says you can't beat the S&P 500. Munger says, watch me.
Yeah.
And so that was just really impressive. We definitely lost a legend. I mean, obviously, the guy was, close to 100 years?
He was 99 years old. So, I mean, that's great. I think we all, I think we all hope to get to that point. So
definitely, and we hope to see, those people live forever. But we all sort of knew that both of them, everybody's been talking about, what's going to happen to Berkshire Hathaway. Yeah. Buffett and Munger are both getting older. So, we definitely lost a legend there. And, want to send out prayers to his family. It's always hard to lose a loved one.
A good life and a very rich and
very,
wealthy
very
life.
Well-lived life. I love some of the stories about him. One of my favorite ones is Warren Buffett said that he said Charlie's idea of traveling in style is a bus with air conditioning. I love a guy like that, man. This guy's one of the richest folks of the world. Warren Buffett the same way, still lives in the 3-bedroom house that he bought back in the 1970s, buys cars that are hail damaged, doesn't ride around in a limousine, only flies in that private jet because it makes him more valuable to Berkshire Hathaway's investors.
Right.
But, I love that. Those guys are... If they weren't so famous, you wouldn't have any idea who they were, and they'd still be just as rich.
Yeah, absolutely. Yeah. So we were talking before this started about a trip you're heading on.
Yeah,
is it next week?
I am. I'm really excited, man. I tell you what, this job. I mean, I got to travel a lot when I was at Morgan Stanley too, but never cool things like this. I mean, I was always going to different banks and different customers and stuff. Every once in a while, it's fun because you get to go to a client in a Caribbean island or something like that. But you're still in meeting rooms. So next week, I'm flying down to Miami, and then from there, I'm going to take a private jet. A little humble brag there. And it's not because I can afford to travel on private jets all the time. It's because this is literally the only way that you can get to the place that I'm going. I'll be flying into the Kennedy Space Center at Cape Canaveral. Behind NASA lines and stuff. I actually had to apply for special clearance from the military to get there. They're on super high alert with everything that's going on in the Middle East right now.
And the aliens.
And the aliens too, of course, because this is NASA. So that's where we hide the alien technology there and at Northrop Grumman or Lockheed Martin?
Lockheed.
Martin, yeah. But anyway, it's really cool. What I'm going to get to see is the world's only privately owned fleet of supersonic fighter jets. And so now these are former military jets that have had all the military things removed. So
so they were built for the military.
These are built for the military. They're the F-104. And so it's a supersonic jet. It was the first jet to achieve Mach 2, I believe.
When would they have been built?
Certain records. So they were originally built, I want to say in the late 1980s, early 1990s. Okay. They were still in military service up until 2005. They're no longer in active military service, but the military still uses them for things like research. They used to use them for surveillance. They'll use them for things like pilot training, war games, things like that. So these are still used by militaries around the world. They still fly. And these ones are basically, they offer sort of a cheaper alternative than renting the military stuff, right? They've been stripped down, so the nose cone on a plane, it's actually, I just learned this, it's actually referred to as the radome, right? Because that is where the radar for the plane sits. It lives in that nose cone. So this isn't a military plane anymore. So they've taken the radar out. So that nose cone is now open for scientific equipment. The plane can carry missiles. Obviously, they're not going to be using missiles for research, so it can carry research equipment under the wings. It's got extra fuel tanks. It can be used. So this is the cool thing. I don't know if anybody out there has ever heard of the vomit comet.
That's when you go up and then you go down?
That's what they call zero gravity training for astronauts,
Right.
the vomit comet, because it's a supersonic jet that goes up and then down, and it can induce about like a minute worth of weightlessness on the down
Right.
because it's going down so fast, right? But then they pull back up and you get that super heavy gravity. It's like extra G's, 3 or 4 G's instead of just 1. So this plane, now they haven't actually tested it themselves, but according to NASA's calculations, when NASA was working with the military to use these planes as a vomit comet, it can do 2, what do they call them? 2, I would say, I guess loops, but they're hyperbola? Parabola? Hyperbola?
Yeah, don't quote
Man,
me.
my old math teacher's going to get so upset with me for that
And
one.
up and down.
But yeah, they could do 2 up and downs, and the weightlessness will last from 45 to 65 seconds. So it's a good amount of time, for weightless training. They can be used for astronaut training. They still are used for astronaut training. And so anyway, this company hopes to get research contracts from research organizations, schools, things like that. Also work with the military, to basically, when we lose a military jet, we're losing billions and billions of dollars worth of money. These guys are a little bit less expensive at like millions of dollars. So it's a cheaper alternative to those. But these jets can also be used, and this is the really cool part, to launch satellites.
Yeah,
Right, so they can fly like all the way up to the stratosphere, and they can
Okay.
launch satellites out. It makes it much cheaper than sending them up in one of those big heavies that
Oh, yeah.
SpaceX has.
Oh, yeah.
And it's much more.
Yeah, that would they're launching them to like low Earth orbit, I guess,
Exactly,
not like
yeah.
the super high ones, but like
No, not the super high ones, but low Earth orbit. And so they're able to launch satellites with these. And so I'm going down to check out the company to see their fleet, to meet with the management. I've talked to the executives on the phone. We've done Zoom meetings and stuff, and now I want to see what they have in person.
And this is part of the process, and this is currently a private company,
It's
right?
currently a private company.
So you're one of your services is called Main Street Ventures, where you're researching and sort of kicking the tires on a lot of these private companies that are raising money off of the stock market. And so you're not just, Googling some company and being, oh, this is good. Okay, you're actually talking to the people, and now you're going down to actually check it out, because more often than not, I'm sure you'd be surprised, the fancy stuff on the website doesn't actually match up to what is actually happening.
There's huge companies that trade on the NASDAQ and stuff like that like their website and their headquarters are 2 entirely different things. Their website is very professional, and their headquarters is like in a shared working space with a bike shop next door.
Right.
And they trade on the NASDAQ somehow. So I mean, you really, really do need to get boots on the ground and go check these things out. I invested in a cannabis company in Colombia. Right, I flew to Colombia to check out that company because you gotta see what's actually there, because it's really easy to, Photoshop pictures. Shoot.
Well, in AI now, right?
I
you
make
can
tons of stuff.
Absolutely, and it's really hard to know that. I know Chinese companies were getting a real bad rap there because of the secretness of just the Chinese government over there.
Yeah.
And there's some good companies in there, but there was also a lot of just overall scams that no one could really unravel.
No, definitely. So you really got to meet the people. You got to get FaceTime with the executives, because a good idea and a good company are one thing, but you got to have a team that you can invest in. You're investing in people, and the people that are running the company. You look at what just happened with OpenAI, right? They decided that they were going to fire the CEO, Sam Altman, and they almost lost the entire company.
Yeah.
That's how important the people are. because the people make up the company. Like OpenAI still has all of the IP, still has all of the whatever software, hardware, whatever they own.
What do you think happened
But
there?
without him,
Do you
people
think
were
there
like,
was? Do you buy into the reasons why he was ousted?
I've heard
that
so many
that they
rumors.
invented AGI,
Right, that
artificial
they
general. They
finally
have a
nailed it.
super and they got scared and they tried to boot him because he's the poster boy
He
for
definitely
that,
is.
and he's not that controversial like Elon or some of these other guys, but to just randomly be ousted and then brought back.
I really don't know. It's a really that's definitely an interesting theory, and it could be. One thing that I've heard is that also he just wasn't very communicative with the board. He was really secretive, and that's the thing is that like people don't think about this because they're like, oh, the CEO, that's the head of the company. No, he's not. The board of directors is, right?
Well, clearly they booted him out.
Yeah, they did, and Microsoft now now it's a 3-member board with Microsoft having a non-voting seat.
Yeah.
I think this is what. I was just picturing Satya Nadella, like Microsoft CEO, in the background doing one of those Mr. Burns, like, excellent. Like,
Yeah.
I can't wait until they fire this guy because I was going to have to pay billions of dollars for this company, and I'm going to get it for free.
Yeah, and so that's an angle there too, and it's just an interesting setup.
And I don't believe for a second that Microsoft was blindsided by that. Nobody puts that kind of money into a company and knows absolutely nothing about what's going on at it.
Yeah, there was some weird stuff with them, like shutting off access to ChatGPT for Microsoft employees a couple of weeks before that. And so there was definitely something strange going on there. And that OpenAI is just a weird setup company in general because it's essentially a nonprofit foundation with an arm that has a capped for-profit.
Right.
So it's not just like a traditional Facebook or Microsoft where they can IPO for billions.
When I was in business school, we partnered with some of my classmates and I partnered with some nonprofits in the Baltimore area basically to create a for-profit wing of their company that they could then use to generate revenue to redirect to the nonprofit because, these guys live and die on donations a lot of the time.
Yeah.
And when times are tough, people don't make as many donations to charity because charity starts at home, right? So people don't make as many donations. These companies do need like a way to keep themselves going. This one seems a little bit suspicious because it's like, oh, let's take a couple of $1 billion of donations from these guys and these guys.
Yeah, I mean, Elon Musk
We're not paying any
has
taxes.
provided
And then
some of the
all
seed
a sudden,
stuff.
We're going to be a public or we're going to be a profitable company or a for-profit company.
Yeah, and I think at the end of the day, that seemed to be maybe what was going on there is Altman sort of noticed what they had was extremely valuable, and they were sort of limited by the thing. And I think
their structure.
their movements, behind the scenes to at least try to capitalize and monetize what they have to the best of their ability. So it's definitely a weird thing with Microsoft and that whole thing.
No, it definitely is. And you mentioning that Microsoft employees were taken off ChatGPT or had their access revoked. That makes me wonder that maybe it wasn't the AGI. Maybe they rolled out an update, too quickly because ChatGPT, version 4 or whatever did just get a lot better. Well, maybe they rolled that update out, and it turns out that they hadn't really paid too much attention to like the security in said update, because that's what a lot of these companies do. I mean, you look at the crypto space, right? All of these companies were just so desperate to get out there to market and be able to be a part of it that they didn't pay any attention to safety, and people lost billions of dollars.
People
to
were
hacks
stealing,
and stuff.
people
were just stealing stuff left and right. Mt. Gox was the first one, and that was huge. And then you had it just happen like all over the place, and it was because these companies they rushed things out the door, which sometimes is okay. I mean, that's how you work technology. You rush the thing out, and then you send out updates later.
Yeah, and there is seemingly the time to market and the competition is rapidly increasing. There's this fear of, who's going to hit this, like you said, AGI or have the mega app first, and then everybody else is going to be kind of left behind. So the incentives of pushing forward and maybe having a catastrophic, and it seems like that's maybe what some of the board members are concerned about.
I'm sure. I mean, communication is definitely big, So if that was, that's reason enough, to terminate a CEO if they're not communicating, if maybe like they're doing something that could endanger the company, endanger the investors, put them at risk, and they're not letting the board in on it. They're trying to hide it.
Well, he's back now, so
He's
I guess
back,
we'll see where. And it really is amazing because looking back, we talked about the predictions episode of last year that we just launched last week, and it was basically around that time last year that ChatGPT launched. And so we're just over a year of having this product out there that has just rapidly changed. So what's coming down the pike here in terms of just AI, not just with OpenAI and ChatGPT, but all the stuff that has just improved over the year. It's going to be an interesting 2024.
And that should be a little caveat to what I said earlier about companies, that own IP and just make money. Is that I do think that there's still a lot of growth for the AI market. I think that it is going to be like the big driver for big tech companies. Like I said, I'm invested in NVIDIA. I love it. It's tough for me to buy shares, at the levels that they're at now. But I honestly do think that they do have more to grow. They have more room to grow. AI is still in its early stages. And this is the thing. It's been around for over a decade. It's just that it's this generative AI that just came out, and now this growing adoption of it, and the rapidity, the fast, the quickness.
Yeah, and now the money's
amazing.
Coming in.
Yeah.
And that's just like early stages of the internet. It was slow, and you kind of had to be like a nerd with you actually had to have a computer and a modem, and it was like,
you had to understand some sort of programming language. It didn't have to be anything too big, but you had to know some of it. Definitely. Yeah. No, it's we're in the early stages, but adoption for this is faster than any technology in history. And so I think it's just going to continue to grow. There's a lot of money to be made. Like you said, though, nobody knows who's going to be that company that, hits it out of the park first, that nails it first. And so, as a little segue here, that's why I and my investors in the Wealth Advisory are sort of going through a backdoor and betting on something that we know is a guarantee, which is that companies that basically the AI market is going to mean a huge increase for the data storage market, right? AI just requires tons and tons of data, right? And as fast as internet connections are, they are limited. They are not instant, right? So all of these companies have servers on their headquarters, right? And that's where they are, and that's where their programs live, and that's where, they live, so they can access this stuff super fast. But me, I'm over here in Baltimore, or when I'm at home, I'm out in West Virginia, right? And I want to access something in Silicon Valley, that's got to come all the way across the country. It takes time. It's not instant, right? So they need access to me. They need a place for their data to hang out near me, near you, near people in New York, near people in D.C., near people in Miami. And they don't own, headquarters in all of those places. So they have to find companies that do, and that's exactly what we've done. And most of these companies share their profits with shareholders. So we're basically just going to get paid because AI is going to grow.
Yeah, it needs to be a distributed network out there. And, not only do you need to store the data, but just the actual processors, the GPUs that go in. I mean, that's really, like you said, that's really the NVIDIA story is that
basically everybody
wants those chips. And so, but where do those chips live? Where does all that data live? And you need to.
This is the cloud that everybody used to talk about.
Yeah,
and the cloud is privately owned. It's not owned by Microsoft. It's not owned by OpenAI. It's not owned by Google. Like they all have their own cloud servers or cloud services, but they don't own the whole thing. They're using other people's stuff.
Yeah, and you guys have been on that for a while in the Wealth Advisory. So that's another one of these plays where you can get the dividends coming in and the capital appreciation
it's
as
the pick
they
and
grow.
shovel plays. I love these pick and shovel plays. They harken back. I'm sure everybody's heard it, like back in the good old days of 49ers in California, and people would come out to seek their fortune mining gold. Well, most of them went back broke if they went back at all. the guys who made money were, like the Wells brothers and the Fargo brothers, right? Who set up Wells Fargo. Right? That's a pretty common name. People know that. Levi Strauss, right? Levi's jeans. People who sold picks and shovels, people who sold things that the miners needed. And so what we look for at the Wealth Advisory is we look for big trends like this, big trends like AI, like cloud growth, like streaming. And then we're like, okay, what are the companies that are providing what's necessary for these services to work? Like, who does Netflix rely on? Who is OpenAI going to rely on? Who are all of these streaming services? Who are all of these AI programs going to rely on? Who are all of these cannabis companies going to rely on? Innovative industrial properties, that was a great one because they don't grow weed, they don't sell weed, they might smoke weed. I don't know them personally, but like they make tons of money off of weed because they provide the one thing that you have to have for weed, which is a place to grow it.
Yeah, and you've seen this with any of these AI companies there's a lot of AI companies out there that you see that are really just piggybacking off of OpenAI's base models and all that kind of stuff. Mm-hmm. And like, while they are AI companies, it's not like they built the technology. They're just living on
They're sort of licensing it.
Right. So you're going even a level deep there where all these people that are building all this stuff on top, the base layer is where this stuff is stored, where it's processed.
All these people need
centers.
OpenAI.
Yeah.
Who does OpenAI need?
Yeah.
Yep. They need these guys.
Yeah. And they're really not company agnostic too. So like you can, if they're supplanted by somebody else, they're going to need the same thing. They're going to need all the pipes.
One of the players that we uncovered, right? They have partnerships with Google, with Microsoft, with NVIDIA, with Hewlett-Packard Enterprises, with names are escaping me, but I mean these huge, basically every cloud provider, everybody who has some sort of cloud, service that they offer, these guys already partner with them. So they are company agnostic. It doesn't matter. And that's why I really like these is that like, it doesn't matter. Is Microsoft going to maintain the lead? Is Google going to catch up? Is X, formerly Twitter, going to come out of nowhere with an everything app? Doesn't matter.
Some company you haven't even heard of yet.
I don't even care because they all need this.
Mm-hmm.
They all need to get it from a few specific companies. So it doesn't matter who wins because me and my investors are going to.
Yeah, that's exciting.
I love it.
And that's a wealth advisory
That is.
play.
Maybe we can put a link in the description below.
Yeah,
here.
absolutely. So sounds like a lot of exciting things going into 2024.
We do.
You have what's the big thing that you think investors should focus on in 2024?
In 2024, I think going into 2024, and I've been saying this all year, and I'm going to continue to say it until I think that the market has recovered, is real estate. And I really like publicly traded real estate because not everybody can afford to be a landlord, right?
Yeah.
Like to buy a property and rent that property out, but everybody can afford to be a landlord by investing in publicly traded real estate. And most of these publicly traded real estate companies operate under a structure that requires them to distribute at least 90% of their pre-tax profits to investors. So you get these steady income streams. It's literally like getting rent checks from tenants.
And we're not talking about, maybe some of them actual houses. We're more some of them there, but we're talking about commercial.
And I really think
commercials taking a hit, like you said. So this is the contrarian play here because you had the COVID thing and then the return to office
that didn't really quite pan out
it's
yet.
Still, there's a lot of government workers in this area, and still we probably you throw a nickel and you're going to hit, somebody that works for some agency and it's like, oh, you're back in the office yet? They're like, no, they delayed it again. And 2024, a lot of them have finally, and I think Biden even came out and was like, because they realized that, look, these cities and these sort of communities, if they cannot have
the
workforce in there, then they are going to really struggle.
I mean, look at how bad San Francisco's going. Like, all of their stores are pulling out because there's no workers there. Restaurants are closing, bars are closing, nobody's going out to lunch or happy hour. They definitely need it. And you also got to figure, like the government, right? The government doesn't own most of the buildings that they put people in, that their agencies are in. They rent them. right? And they still have to pay the rent whether those people are in there or not. They didn't get a break like everybody else did, from 2020 to 2022 on paying rent. They had to continue paying, and these are specially built offices, because government agencies require, certain security procedures, certain, different, just different types of buildings entirely. And, so you've definitely got that. I think we're going to see a lot more back to work. You're already sort of seeing it in Europe, and I think that's going to carry over to the U.S. And commercial real estate trusts have just gotten crushed. There are some great ones out there. There are some who literally only do business with the government and government contractors.
Right.
So, you're guaranteed to have tenants there for a long time. Collecting those rent checks, a lot of them are yielding 9, 10, 11, 12%. You can lock that in now. And that yield, it's going to eventually go down as the stock price goes up. But if you lock it in, it'll stay that on those shares that you bought forever.
Yeah.
So if you pay $10 and the stock's yielding 10%, you're going to continue to get $1 on those $10 shares forever, even when those shares are worth $20,
Yeah, and these are companies that have paid out dividends for
going
back 20 plus years.
Yeah.
Like, these aren't just like, hey, we popped up, we're going to give a dividend for a year just because
They've been paying
they just
them for a long
consistently,
time.
like you said, they're
grow
required
them.
to.
They are required to every time they grow. And this is the thing, is there's a lot of M&A activity going on behind the scenes in the real estate market. You've got big deals. You're talking about in October? In October alone, right? This past October, there was over $30 billion worth of real estate M&A, right? Just big funds buying little funds because their asset values are still super high, but their current valuations are so low. There's this huge disconnect, and they're like, we need to take advantage of that now. And so when those multi-billion-dollar firms are saying we need to take advantage of that, and they're throwing $30 billion a month into the market, retail investors need to take note. Retail investors need to listen. There's a lot of activity going on. There are a lot of things out there that have the same assets that they had in 2021 when they were worth, like I said, with Innovative Industrial, $300 a share, and they're trading for like $100 a share now. Same assets. If you factor in inflation, the assets are worth more. They're still making the same amount of rent. A lot of them have added new tenants, so they're making more money, but they're priced down here. It's this disconnect, and those are the things that you look for as an investor to exploit. So I would say definitely real estate, my big thing in 2024. Everybody going into 2024 needs to be looking very seriously at publicly traded real estate. You don't have to go out and take out an 8% mortgage and buy a house.
Yeah,
but take 100, take 200, take $10 and put it into some of these real estate stocks.
Yeah, you just get this. Invest in this company, sit back and collect. You don't have to worry about calling people,
to do nothing. That's
calling
like the
a tenant
dream
to get
now.
Paid, doing renovations on it. You just
don't even have
let
to
them
make
handle
movies for Instagram. You can literally get paid to do nothing. It's amazing. And these are the best kind of companies. They're some of the most successful investments. The most successful investors out there love them. Brian, I know you guys, have heard Brian's advice and has seen how accurate he can be. They are some of his favorite investments. That's why he and I are constantly talking back and forth because, we are both big on these. We are both very bullish on them. And so, yeah, real estate.
All right. That's your mandate for 2024, folks.
It is.
Well, thanks a lot, Jason.
No problem. Thanks for having me on.
If you want to learn more about Jason's services, he's got quite a few of them. Check out the link in the descriptions below and like, comment, subscribe, and all that stuff. And we'll see you next time.